And welcome to the Aaron Katzman Show. I'm your host, Aaron Katzman. We speak about your life, your money, and your investments. And as always, we're coming to you from the spiritual and soon-to-be financial capital of the world, Jerusalem, Israel. If you like this content, please hit the like button below. If you've not yet done so, please subscribe to both the YouTube channel and to the podcast. And if you think someone may find this of interest, why don't you go ahead and hit the share button and share it with them as well. So, the Seahawks won the Super Bowl. Woohoo! Finally, those of us from Seattle have something to cheer about on the sports scene. It's been a while. We were tantalized by the Mariners earlier this season, but we finally got over the hump and we won a championship with the Seahawks. The beauty of what the Seahawks did is that there were no stars on the team. It wasn't like one man who won the Super Bowl. It was talk about a team effort, from the dominating defense to the offensive line, who created holes and just owned the line of scrimmage and allowed Kenneth Walker to run for whatever he ran for, 135 yards, and Sam Darnold not making any mistakes, and Jason Myers kicking field goals, and Dixon having punts land inside the red zone. These are all things where it's a team game. Football very much is a team game, right? Even the stars can't excel without the other people on the field helping them out and doing their jobs correctly. It's a lot more different than basketball, where you can have one person dominate more. The reason I want to highlight this is not to brag and show pride of, my former city of Seattle, but it's to speak about what's called diversification, diversifying your portfolio, because it's very, very similar, especially times like this where everybody piles into high-tech stocks, and a few of them, hoping to find the winner. I was on a Zoom yesterday with somebody who lived in America, and they were saying that they have, a 401k, and they have this, and they also said, well, we also have some stocks. And they said, and they're really good. And then they lied back in their chair. Yes, they have very good stocks. So I don't even know what that means, okay? But they were very proud of a few stocks that they picked. And I can guess that they were probably companies like NVIDIA, maybe Palantir, other high-flying AI companies. But as we've seen recently within the world of software stocks, when you are not diversified, you can get absolutely whooped in the market. So Vanguard talks about diversifying your portfolio, and they say like this: you've heard the expression, don't put all your eggs in one basket. The reason is that if the basket falls, you could lose everything in one fell swoop. But if your eggs are in multiple baskets, you have a much better chance of getting home safely with enough eggs to make that omelet. The same principle applies to your investment portfolio. Keeping all your money in one basket, whether that's stocks, bonds, or real estate, exposes you to the risk of losing more during a market downturn or geopolitical event. A diversified portfolio, they say, on the other hand, spreads your money across multiple investments. If one drops in value, the others can help offset losses and stabilize your portfolio. Diversification is one of the most fundamental strategies for building an investment portfolio focused on the long-term growth. Now, it's very important to point out, diversification is not a guarantee. Diversification doesn't mean you're not going to lose money. Oftentimes people say, we'll have a diversified portfolio because when some things go down, other things will go up, and the worst case scenario will be at zero. Well, that doesn't work that way. You can have a diversified portfolio and lose a lot of money as well. Maybe not quite as much as you would lose if you didn't have a diversified portfolio, but it's not a guarantee against losses. Okay, so Vanguard says, what's diversification? This is their definition. Rather than trying to pick up potential winners and avoid potential losers, diversification calls for owning a piece of the entire market to increase your chances of long-term success. As the saying goes, if you can't find the needle, buy the haystack. Not so familiar with that saying, but if Vanguard says it. Diversification helps lower your overall investment risk by tapping into a concept known as correlation. Correlation is used to show how different investments move compared with one another. When you combine investments that don't move in the same way, your portfolio has low correlation, which can protect against extreme declines. For example, when stock prices fall, bonds typically, but not always, go up. By owning both, you can reduce big swings in your portfolio's value. So they ask, how can you diversify your portfolio? True diversification involves owning stocks from various industries, countries, and risk profiles. It also means investing in other asset classes beyond equities, such as bonds, commodities, and real estate, whose performance isn't usually in sync with stocks during different market environments. These assets work together to reduce a portfolio's overall risk and volatility. How does it work? Diversification applies to both the stock and bond portions of the portfolio. On the stock side, it means owning shares of U.S. and international companies of different sizes in different sectors. Bond funds are composed of government bonds, corporate bonds, and municipal bonds, among others. Having a balance of lower risk assets like bonds and higher risk assets like stocks allows a portfolio to grow while providing a cushion against volatility. While stocks offer higher expected returns over the long run, they can experience substantial short-term swings. High-quality bonds, on the other hand, tend to generate lower returns but may provide stability. A diversified portfolio approach may underperform relative to a winning investment, but it may provide stability and can help you sleep at night. What's the point? The point is, like a football team, like a world championship winning, Super Bowl winning football team that we know of, maybe like the Seahawks. Go 12s, okay? It's about diversification. It's not about owning one investment, which is going to make you millions. It just generally does not work that way. It's having different things in your portfolio working together, picking each other up, right? When one of the players isn't having such a great game, the other player picks them up. When if one of your asset classes isn't doing so well and is dropping, one of your other asset classes will help provide stability. That's diversification. That's football. They really, really do go hand in hand. I know people are going to say, well, what kind of stupid connection are you trying to make here? But it's not. It really is true if you think about it. Even if you have star stocks in your portfolio, if you don't have that diversification, chances are you're going to have a lot more volatility and no guarantee of higher gains than somebody who has a diversified portfolio who sleeps a lot better at night, knowing that if something craters, it's not the end of their net worth, not the end of their portfolio. So if you have any questions, or if you don't have a diversified portfolio but are thinking of one, why don't you read up on the topic? Feel free to reach out to me. I'd be happy to speak to you as well. And realize that the key to growing wealth over the long term isn't hitting one stock. For 99.9% of the population, that's not the way that it works. It's slow and steady. It's to continue to invest on a regular basis, whether it's monthly or quarterly, semi-annually, annually. Just keep adding money to your account and not trying to be too clever within your investments, but stick to basics, chocolate vanilla, slow and steady. At the end of the day, history shows that's the time and tested true method of growing wealth. Okay? Diversification. Way to go, Seahawks. Way to make us proud. Let's go for 2 in a row this upcoming season. It's nice. It's nice to finally win a championship. You've been tuning into the Aaron Katzman Show. We speak about your life and money and your investments. If you like this content, please hit the like button below. If you've not yet done so, please go ahead and subscribe to both the YouTube channel and to the podcast. And if you think somebody may find this of some interest, why don't you go ahead and share it with them as well. Thanks so much for tuning in, and we'll speak to you soon.